What is going on, everybody? In this video, we're providing you a state of the market and stock picks for January 4th, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So today was numero uno in the books for the market for 2023, and what a big day it was. There was a lot of downside pressure. Now, if you don't play to the downside, there's other alternatives. If you only trade equities like SQQQ, um, they typically will allow you to essentially trade at the upside like you would normally. But you're essentially betting that the market goes down. Not it is an ETF too as well, so just be mindful of that. But I've been playing primarily put options throughout last year into this year, and buying essentially to the long side shares at this point. So right now, what we're seeing is the market's still undecided. Obviously, there's still a lot of bad news. It didn't help this morning that you had Goldman Sachs CEO come on and start talking and essentially tanking the market this morning. But technical wise, as you can see, and something I've been talking about going into this week was to really keep an eye roughly around the 3,800. Was it 3,800? 3880 this morning was right where the daily EMA 20 and 50 was, and essentially the chart hadn't touched it on the daily for a while. We've had this massive move down, so there's this huge gap between the EMAs and where we're at, and today it actually touched, and we got a really hard rejection. We had that push this morning, and then that news dropped essentially at the same time, which was funny. And then the market just tanked all the way back down to 3,800. So it was an absolutely crazy morning. I was actually captured a couple moves on that to start the year out well. But nonetheless, it's good to be able to know how to play both sides. And nonetheless, learning during this time is to learn how to play both sides. The trend is down. If you've been playing or know how to play both sides, you always play the trend, and that always helps. And don't take every position, whether it's the long or the short, unless there's a massive move or you come into a big rally, which can go for a couple of days. When we get big pivot changes, normally we have a big rally. We saw that last year a couple different times, but then it just sank. So those are the kind of things we look for. And again, why it is very, very critical if you want to be a trader to be able to trade both sides. Now, an investor doesn't matter. Obviously, at these levels, I am slowly starting to pick up levels here. I think it's important because I do believe it makes a lot of sense that we could be reliving the 1920s after that huge the depression, and then coming right out of there. I think it's a very strong possibility that we could have our version of the Roaring Twenties coming here very shortly. But again, we still have to be mindful that things are really bad. I think right now, again, what I've been talking about is a hope that nothing breaks. If something breaks, it could get really nasty. You could see another 15-20% down. So you still have to be mindful of that. That is still something, my thesis there is still intact. It's not saying you can't take advantage of some of the upside, but primarily, again, the massive downtrend is down. And so I will continue to only play puts down, and then I will accumulate as many shares as I can to the long side at specific support levels, because I do believe we're getting close, and I'm okay taking another DCAing at this point, because I think we've taken enough off the top. Yes, it could still fall a lot. Individual stocks, maybe not so much. I think they could still probably drop a good maybe 10-15%. It really just depends on what that catalyst is, if it does break. And that's what kind of I've been talking about. I'm kind of waiting. We've been kind of running this engine with no oil. It's just waiting for it to break at this point. So this today started out wild and crazy, but we are still holding. Like I said, the 3,900, 3,800 we're bouncing around there. We do have non-farms on. We do have the FOMC tomorrow, so that's something to keep in mind. That's at 2 p.m. Eastern Standard Time. Again, it's just a report. We're not going to have Powell following it up, but it's going to give good insight into a pivot. And that's what's important and something we're going to be talking a lot about again this year. Last year, I didn't really talk about it because there's just too much hopium and too much back and forth between a pivot, and I just didn't see it coming. This year, I can actually see a pivot coming. But the question is when? Is that when the Fed stops raising rates? Do we get a massive pivot and start heading up? Not going to say we're going to make all-time highs, but it could start leading us in a good direction. But before we even talk about that, we have to kind of understand that I think we are going to have, I think our engine is going to seize and we're going to explode before that happens. So that's kind of what I've been talking about. So to this point, we have non-farms on Friday. Next week we do have core CPI on Thursday. That's going to come out pre-market again. I think we may have reached peak, but if we can start the new year off with continued gradual downturn of inflation, which inflation is still very high, and the way they gauge inflation is absolutely absurd because they take out the parts that matter. And the parts that matter are housing and food. And right now, those things are still high. There's still a lot of housing. Rental units aren't going to come anytime down soon, as the things I've been talking about with essentially the housing industry is that people will get to the point to where, okay, well, I can't afford anymore. Maybe I have an extra rental or two and I'm trying to liquidate my home. That I still see us getting to the point where we have an oversaturation of housing because people just can't afford to purchase a home, so they're going to have to rent. So even if they do liquidate, they are looking to rent. And so I think it's going to continue to drive up the rental prices. I don't see that coming down anytime soon. There's a lot of prices in food are still very high. If you go out to eat, you'll notice it is still very expensive to eat. That is something to be watched and mindful of. It's still expensive to do a lot of those things. So yes, prices might come down on a lot of other things, but just to survive, your basic necessities again are still very high. So you really can't go off of the data too much. It's not saying that the market can't pivot away from that, but again, I think it's still that aspect that I'm pointing out could still seize the engine and then cause the whole engine to explode. And that's what I'm talking about. And then when the engine explodes, that's when you go all in, and that's what I'm trying to gauge and watch at this point. So with all that being said, again, technical wise, we're still holding as non-farms. I think non-farms could be enough of a pivot because we don't really have any information to the core next week, and then we also don't have monetary policy till I think it's the 1st or the 2nd of February. So do we continue to chop around here? Again, it's still a very big range. I like bigger ranges like this. At least it's 100 points on the SPX. I do play a lot of options on the SPX, and I do play some random stocks. It just really depends. I play a lot of the same ones. That's why I have this core list here. Again, these used to be some of my all-star team hit list back in the day before essentially last year. Right. And so all last year I traded maybe a handful of these continuously all year. That's all I did. And it's a good way to start too. Just trade a couple so you know how they look and feel, especially if you're going into options. You need to know how that stock looks and feels and how options move. And that's also why I talk about, expected move in options is because it's important to know that you know what volatility they're trying to price in. And so a lot of times, sometimes options just aren't worth trading. Because they price in too much. And so you have to even break even, you have to have a bigger move than what they're anticipating. And it's just not worth it because you're just burning money at that, essentially at that point. So with that being said, SPX still looking pretty sideways, but again, we'll see what happens tomorrow. Maybe the FOMC notes, maybe we'll get another pump up to the 3880 and then go from there. My question still is are we going to get any kind of earnings rally? Normally it's the Christmas rally during this time, but I don't know if that's going to be possible or not. There's just still we're still getting, it's the first day and we're still getting news. Like we're getting bad news from Goldman Sachs CEO, and then we've had like a lot of different CEOs from banks already come on. So when they start reporting here in another week or so, we're going to start really getting some negative news. So we need to keep that in mind, because that might just completely flop this thing over and start selling, and it's something to keep in mind. So take a look at Bitcoin. Bitcoin's dropped a little bit more, still very flat coming in this year. Again, it's going to follow the market. So it is pretty stable right here. Again, when the market really starts to sell, we want to watch Bitcoin. Is that going to drop Bitcoin lower or not? So that's kind of what I'm watching there. The dollar, again, consolidating a lot and doesn't want to break the 102. Again, I've talked about the daily support here. I think it's actually a weekly support here. The 200 is sitting right here at the 102, so you're getting closer, an inch and closer. This thing might really pop, because normally after bigger time frames you'll get bigger pops, and so you need to really keep an eye on that dollar there as well. Tesla continuing to sell. Big obviously candle today, retested essentially the 108. This thing going to keep selling down is the question. I could see a break below 100 very easily, especially if we drop. The question is when. You got a pretty big gap down here to the 80 mark, so we're really kind of watching that to see what happens there. Tech all in itself. Apple, same way, absolutely wrecked today. It's not good. We had the production numbers come out from Tesla over the weekend, and they missed quite a bit. There was still a lot in transit, so you can, take that as you want to, but nonetheless, Tesla's one of the best companies, without a doubt, and they're struggling. Apple, because of, and you have to remember, there's been a lot of lockdowns in Q4 as well. That's going to hurt in earnings for Apple, and so that's why you're getting a lot of selling. They're trying to price it in. Now, once they feel like it's priced in, we'll start pushing back up. But you have to understand that if they at all missed what they thought they were with expectations, Apple could crater even more. So we have to. That's why I'm very keen on what's going to happen with the upcoming earnings here. So, and seeing what comes of Q4. So there's that. BA. This is again something you have to really watch. BA and the banks are holding the market up. If BA and the banks flip, that's essentially going to be the end of the market. And the market is going to crater. And what I mean by crater is you're probably going to get a couple days, maybe 100 points, 150 points in a couple days. Could happen if they flip. And so they've been holding up the market, and something I've been talking about, it seems almost for like a month, maybe even a month and a half, but this thing has been overextended. It's been about 2 months. We've gone straight up. And so still can't break the 200. If we can't break the 200, this thing's going to flip and start selling. So you have to be really mindful of that and very careful of that, because this thing, if it starts getting momentum on the downside, it could drop pretty quick. Yeah, there's pretty strong support here at the 171, but if it breaks that, that's going to be a pretty nasty fall from there. So again, very overextended, and it will drop at some point. It's just, when will that happen? And JP Morgan, again, still playing range, just like the market, holding essentially roughly the 138 mark down to the 129 mark. So again, a break either way out of this really dictate the market. Again, I think it's going to actually break down, to be honest. Very overextended, hasn't retested anything or even made a 50% correction move. It's definitely not good. So that just means more of a stronger move down is what's going to happen. This is why you don't want to be overextended and not retest anything, because that just means that move that's coming down is going to be pretty powerful. So, and again, it could mean a 100-point day on the general index, maybe 150 points. It just depends, right? If you get news events, this is why I like to trade news events, is if you get a news event on top of everything, it's going to feel it even more. This is why I like playing options in news events, because if you can land an option correctly when a news event hits, those options can jump hundreds, if not thousands sometimes. It really just depends on when that news hits and your timing on getting in. And so nonetheless, this is pretty much where we're at into the new year. I think it's been a good start for me so far, but again, it's day one, but we want to get off on the right foot here. Again, I think this would be a very big and pivotal year. this is be the year of accumulation, at least in the first 6 months, I believe. And then from there, I think we could potentially get into a big boom cycle, but we have to wait and see. I thought that last year that we would boom back in the back half of the year, and we did not. Things got worse, and my thought process, my thesis started solidifying itself as, we haven't seen the worst of it yet. We were just seeing the tail end. Stock market will recover before anything else. Stock market. If you look at the stock market and you think of baseball, stock market is essentially your leadoff hitter. And then your number 9 hitter in the hole is your real estate. And so your real estate is dragging. And I don't think we've seen the worst of real estate either. And so if I don't think that that first batter hasn't seen the worst of it yet, then that back half is really going to suffer. And so that's just trying to kind of putting stuff in perspective on how big of a lag there is and what we could potentially see. So I'm saying it will happen, but if the engine seizes, I think it get pretty nasty. So right now we're running and we're toying, we're playing, we're putting a lot out there just to hopefully pop back up, which I don't see happening because I think again you're going to get more layoffs. You're going to get those numbers continued more and more. The rates are going to remain high. And so this is just an adjustment. But once this adjustment takes place and we get the correction, then you go all in. Again, not financial advice, but we have to wait and see when that happens. So if you made this far, I do appreciate you. Welcome to 2023. Let's get this year started off right. Let's do this thing. Big year coming. Be excited about that. Yes, things are pretty crappy right now, but they will get better at some point. We can't time it perfectly, but we'll try the best that we can. All right. See you guys later.